ETFs 101, Part 2. ETFs and mutual funds. Two great investing tools. But in most cases, one of them wins, and I'll tell you why. But first, I'll tell you what they have in common. Both ETFs and mutual funds let you invest in a basket of investments in one single purchase. Both are diversified, both are regulated, and both are ways to invest in the stock market without picking individual stocks. So what's the difference? Quite a bit, actually. Difference one is how you buy them. ETF trades on the stock market, just like a stock. You can buy and sell anytime that the market is open. Real-time pricing. A mutual fund is different. You can only buy or sell at the end of the trading day, at whatever the price is when the market closes. You don't know your exact price until after the trade is done. For long-term buy and hold investors, this probably doesn't matter much, but it is worth knowing. Difference two, the cost, and this one matters a lot. ETFs typically have lower expense ratios than mutual funds. The median expense ratio for an ETF is just under 6%. A mutual fund, on the other hand, is just about 9%. That gap might sound small, but over 30 years, on a $10,000 investment, a 1% difference in fees can cost you roughly $25,000 in growth. Low-cost ETFs like VOO, my favorite, are even cheaper at around 0.03%. That's almost nothing. Fees eat your returns quietly over time. Lower is always better. Difference three, taxes. And this is where ETFs really pull ahead. When you're invested in a mutual fund and other investors sell their shares, the fund manager sometimes has to sell holdings to pay them out. That can trigger capital gains, which get passed on to you. Even if you didn't sell anything, you now owe taxes on gains you never even saw. ETFs don't work that way. When someone sells ETF shares, they sell to another buyer on the open market. The fund itself doesn't have to sell anything. Far fewer taxable events. More of your money stays invested and compounding. Now, if you're investing inside of a Roth IRA or a 401k, this matters less because you're sheltered from taxes anyway. But inside a regular brokerage account, ETFs win, and it's not even close. So is there ever a reason to choose a mutual fund over an ETF? Honestly, yes. If your 401k only offers mutual funds, you don't have a choice. And that's fine. Low-cost index mutual funds inside of a 401k are still a great investment. But if you're inside a regular brokerage account and have a choice between a comparable ETF and mutual fund, the ETF wins almost every time. ETFs and mutual funds are more similar than they are different. But those differences add up to real money over time. Part 3 of ETFs 101 is coming soon. But in the meantime, don't forget to smash that follow button so that we can grow our net worth together.